Welcome back to Morning Movers. I'm Diane King Hall live here on the floor of the New York Stock Exchange. Joining me now to take a look at Zoom ahead of its quarterly results, which come after the close. We want to welcome in our next guest. That's Steven Dickens, CEO and Principal Analyst at Hyperframe Research. Steven, before we dive into expectations, I was looking at a chart for Zoom and, going back 5 years and just what's it's the opposite of a mountain climb. It's, kind of coming off the mountain here. Are the long glory days of the pandemic gone for Zoom?
So, Diane, Zoom was obviously a darling of the pandemic era. We all got on Zooms. Everybody went remote in early March 2020. And since then, obviously, the company's been sort of part of the lexicon in the public. We talk about going on a Zoom. They've moved to the point where the app and the experience is the verb for Zooming a colleague and jumping on a Zoom. But obviously, post-pandemic, we've seen people return back to office. We've seen competitors like Microsoft Teams take a lot of share here with their bundled approach, the same with Google Workspace. We've obviously got players like Cisco WebEx who've always been in this space. So I think what you're seeing here is just an acknowledgement that what was a pandemic darling has just become part of the way we communicate and operate in.
Steven, it's tough because, sorry, you cut out a little bit on me there, Steven. Steven, it's tough because, to your point, it's turned into a verb. Like Google, you say you're Googling something, even when you're getting on a virtual meeting on another platform, whether it is Teams or Google, virtual meeting, you say, let's set up a Zoom, even if you're not using Zoom. But it hasn't been able to, kind of carry on that momentum. Let's talk about expectations going into its earnings. Street looking for EPS to come in at $1.43. Revenue is expected to top $1.2 billion. Does that line up with what you're thinking?
Yeah, I think some of the fundamentals here, it's how the company moves and sort of gets into its federated AI strategy. We talked there about a couple of the big players in the marketplace, Microsoft with Teams and Google with Workspace. Those have obviously got bundled approaches. And what we're seeing here is the transition that Zoom is on to being that place where work happens, and that's going to be powered by AI. So we're looking for a couple of things as we look for earnings. Some of those fundamentals you talked about, the overall profitability of the business, the earning per share, looking at top line revenue, obviously, but some of the key metrics, we're going to be looking at their contact center business. That's where the growth is coming from. So when you're listening to the call, we're listening to that specifically and what they're talking about there on contact center. And I think that's really, for me, the positioning here. Zoom has got to get beyond the sort of core experience, this sort of workplace communication tool that we've all sort of been used to, and it's got to get into where work happens. It's got to get into collaboration. It's got to get into contact center. So when you're listening to the call, yes, we've got to focus on that top line growth, the earnings per share. We want to see a beat obviously on both of those. But I think for me is where the guidance is around some of that contact center business and the overall sort of trajectory of where they are in some of their enterprise clients.
Steven, let me ask you this. I know one of the things you've been paying attention to is what Zoom is doing in terms of democratizing its AI companion, which is different than customers who, you charge a subscription and that ends up being sticky. Is that smart for Zoom?
Yeah, I think so, Diane. I think what I'm seeing here is these guys have got to compete with those core franchises from Microsoft. They've got to compete with the franchises like Workspace from Google. Obviously, we hear a lot about Gemini. The company launched Gemini 3. They're at the frontier of these large language models. So I think what's key is how does Zoom compete? It's not going to compete by charging more for AI features. So I think they've got to take a different strategy than Microsoft with Copilot and Google with Meet, and really look to get people to engage with their platform and use it as where they do collaboration. And if they can do that, then they'll be successful.
Okay, beyond collaboration, let's talk about Agentic AI. Now, one of the things I know you've been watching is the progress on that front. Essentially, digital workers, maybe you have a digital assistant that goes beyond just summarizing. Where do you think Zoom or any overall within the tech sector, actually let's focus on Zoom, even if Zoom isn't hosting the meeting, where do you see them fitting into, say, Microsoft Teams and doing that work and that potentially being a tailwind for Zoom?
Yeah, so Diane, we're seeing this across the board. We're seeing this with Salesforce with their agent force approach. We're seeing it with Zoom. Zoom's got to get out of being communications. I've hit that point a number of times, and what they've got to get to is positioning their platform almost like a Switzerland. So operating in that world where there's other platforms and being able to position their agentic layer as able to complete tasks. So I think if we can see Zoom starting to take that position, and that's why some of those large enterprises, that's where Microsoft's got a strong foothold and strong market share. That's where Google plays with Workspace. If we can be seeing that those enterprise numbers, this is large clients, if they'll be talking about that on the earnings and be focusing on their enterprise sector, if we can see growth in the earnings call in that space from Zoom, that's going to be a key indicator for me going forward.
Steven, I'm curious to know your tech sector outlook, especially as we're heading into 2026. And, we're seeing headlines now, Alphabet, Google, now Worth it. It's the third biggest market cap here in the U.S. So what's your outlook across the sector going into 2026?
Well, I think Zoom is a key indicator for, you talked about some of those mega cap names, and I've been on your show, and I know we talk about them a lot. But for me, Zoom's a bellwether of what's happening in that second tier, that sort of mid-market. Obviously, sort of strong, multi-billion-dollar company. But we're seeing seat compression. You can't have all the benefits of AI and then not see organizations. We've seen AI-driven layoffs from big companies. That translates to an organization like Zoom. Whilst there's an opportunity for them to infuse their products with AI, there's also the challenge of seat compression and just less users in these big enterprises to consume these licenses. So I think it's going to be really fascinating. Obviously, we look at the big AI data center build out for the mega caps. But I think if we're going to get a view of whether some of those layoffs that are being driven by the ROI of AI are coming through, we can see that and start to see that. You'll hear probably one of the equities analysts talk about seat compression and layoffs in the enterprise sector. That's going to be a key answer on the earnings call later on today.
All right, thank you, Steven. That is Steven Dickens, CEO and Principal Analyst at Hyperframe Research. It's always a joy hearing from you, Steven.